Well, hello, you trader nerds. It is a terrific Thursday. Hope you all doing well, having a great day. I've been speaking to high school students all day. Got one more students' room of classes to go with, and looking forward to getting their little minds into the wealth accumulation. We want them to be prosperous, live long and prosper, so to speak. We don't want them to be in poverty like a lot of people around my area are. It's a kind of a depressed area. And we want to take kids out of poverty. So that's what we're all doing. So y'all pray for me as I go and speak to the young little minds at Bowden High School. So welcome in. Real traders never trade alone. They trade with their fellow nerds. We got 12547 with us. We got Carl. We got Edwin. We got iPhone. We got Kevin. We got Mike. We got Mo. We got Rickster in the house. We got Robert and Scott and Stacy and Vicky with an I. Where's Vicky with a Y today? Anyway, where's Hal? I always miss when Hal's not here. Anyway, good to see all of you. Hope you're doing well. And y'all, I have made additional changes to the trading plan, but I'm done. I am done. I have gone up on the mountain. The Lord has given me the 10 commandments, and I am finished putting it together. I cannot do any more back testing than what I've already done. I've thought of everything. And the plan is the plan, and I'm never changing it ever again. It is the plan. So what I thought about that I should do, you know how you have a little angel on one side, you got a little devil on the other. The little devil was sitting there telling me, here's what you do, Bob. You don't give anybody the secret sauce, and you make them come to you for the secret sauce. So y'all could come to me every month and you say, all of the subscribers that were in the Discord would say, okay, here's how many shares of this I got. And then I'll go up on the mountain and bring the tablets down and tell you miraculously how many shares to buy and sell of each asset. And then I thought, Bobby, that's so cheesy. You wouldn't do the little angel on me said, you wouldn't do that to everybody. And you know what? No, I wouldn't, because that is cheesy. So what we do is we have a spreadsheet that is for all of our Muscadine Mafia subscribers. We'll get the new spreadsheet today. And I put a lot of work into it. I'm really proud of it. And I put a lot of work into this plan. And so they will get the plan for free, everybody in our Discord group. So y'all support me. I support y'all. That's what we do. And it's a win-win situation. I am not saying that I'm not an option seller anymore. I don't want to be a premium seller anymore. I am done with those days. I am fully convinced after 12 years that you can't really make money with it, because the Black Swan event will come and the Black Swan event will knock you down. Now, you can make money 90% of the time, but 10% of the time you're going to be knocked down and your losses are going to exceed what your profits were. And I think that's what happened to us. We had 3 really good years, y'all, really good maximum. We were over 20% returns for 3 consecutive years. And then we had one event come and just wipe us all out. And I'm just like, you know what? Screw that. I'm not going through that ever again. I'm not. So we've got the new plan today, and it's got a lot of back test results on it. And I think it's a good plan. Now, it worked in the past. Does it mean that it will work in the future? No, it does not. It absolutely does not mean that it will work in the future. So let's look at the market first. Market's up NQ 0.66%. That's nice for our TQQQ positions. And the E-minis up 0.15%. VIX is at 19, and the AD is a putrid 27. Let's look at the big green monster. Where's my freaking big green monster? Let me detach this. Detach. Where's my detach button at? Detach. Where's that at? Detach. Here we go. Detach. And we'll detach this, and then we'll go and pull up our volume profile. There we go. So volume profile, look at this, y'all. We went all the way down. I bet that was close to our support line, wasn't it? No, it wasn't even close to our support line. And now we're just, lingering on either side of the 50% line. So now this will be resistance. Let's see what the NQ looked like after the big fall yesterday. Okay, it did go to a support line and kind of bounced around there. We saw some interplay within that 20% line, and then we bounced back up. So we are still overbought for the fair value zone below. This does look a little bearish to me. Actually, looks a little bearish. We may test this level, the 2131 level, for a couple times before we actually fall down below it. But let's see what the linear regression is telling us. as we like looking at this on the E-minis. We may start looking at this on the NQ, but we are still in the area of a consolidation. So consolidation getting wound up like a top, y'all, and then we'll see if she surges ahead or if she plunges down below. So really, does it matter? Not really to us. It really doesn't matter. All right. So if you'll notice, I got rid of a lot of my charts. Got rid of a lot of charts. All I have now is two charts. I have the 10 versus 20 weekly on the QQQ. So this is a bullish signal. If the 10 is above the 20, we are risk on, right? And then we have one more that we look at, and that is the 10 monthly simple moving average. We look to see if price is indeed above its 10 simple moving average. Now you can either do a replacement for this one. If you don't want to do this 10 month, is the 200 daily moving average is about the same thing. You just want to make the price is above its 200, or you can do the 10 month. They're just about the same chart. I am going to defer to the 10 month chart to determine if we are bullish or bearish. So I got rid of all of the MACD indicators, and basically in my back test, the MACD did not add much at all to our returns. It didn't enhance the returns. It actually pulled the returns down a little bit, which was a little bit surprising. I thought it would probably do good, but it did not in the back testing. So our strategy, now you're going to notice, I know what you're saying, Bobby, are you on your medicines? Y'all, this is a question that my wife asked me. Yes, I am fully medicated, okay? I'm on my Effexor, my venlafaxine, I'm on my Geodon, and I'm on my Adderall. I'm on all three of them. And yes, I have been a little sporadic lately, but I've been doing, and I've had so much fun, y'all. Oh my gosh, I love this stuff. The back testing, the strategy development. But once I get strategy fully developed, it's done, right? Occasionally I'll make tweaks to it. Yeah, I do. But I think that this strategy is done. And I'm very excited about it and very excited to unleash it to you. So let me just go through it once again. So everybody's got the strategy. Again, if you are in our trading room, you get free access to these. All right. The base allocation that we set up every month, if it's the first trading day of the month, you're going to go 55% TQQQ and 45% TML. Now I'm getting all kind of questions, Bobby, why TML and not SQQQ? I tried SQQQ, I tried GLD, I tried TMV even. I've tried cash, I've tried bill. TML, listen to me, did the best in the back test. Does it mean it's going to be better in the future? No, it does not. So TQQQ is capped between 20 and 80%. The TMF allocation is the complement to TQQQ. So whatever TQQQ is, 100% minus that is your TML. If the combined adjustments would push an allocation outside of that range, we're going to cap it at either 20% or 80%. We never want to go less than 20% TQQQ, and we never want to go more than 80%. We want a little bit of diversification there. Now, we're going to ensure that the total allocation, you're going to notice a new symbol here, TQQQ plus TML plus QLD plus SQQQ plus bill never exceeds 100%. Now, I told y'all that QLD is the 2x leveraged NASDAQ 100. SQQQ is the triple X leveraged inverse leveraged NASDAQ 100. So this is just the opposite of TQQQ. This is the negative version of it. It goes in the opposite direction. Now we do have this wonderful federal funds rate trigger. Someone said, Bobby, TMF during 2022 was horrible. No, it was not for our strategy because our federal funds rate cash trigger got us into cash fairly quickly in 2022, and we were in cash for several months. And it did not hurt our return because when the Fed is aggressively increasing interest rates, then we need to get into cash or to bill or to some sort of safety. TMF is not the asset. So this actually took us out of the 2022 market, saved us a bundle of money. Okay. So what we do here is you look back 3 months. So if today is October, you're going to look back to September, August, and July. Did I do that? July, August, September. If it was October, so you look through that months back, and then you look from that July month to the present. Did interest rates or the federal funds rate, did it increase by a half a percentage point or more? And if it did, we are moving to 100% to cash or bill, baby. So it gets us out of that bad 2022. Now, will that work in the future? We don't know. It's for the best that I've got. We got recency bias. We got all these biases that and that's what back testing does. All right. We do have a VIX adjustment. In my back testing, I found that the higher the VIX, the worse TQQ does. Okay. So you only apply this when invested in TQQQ, QLD, or TML, not when we are in SQQQ. And you don't even know about investing in SQQQ now. And I'll show you that in just a minute. So if VIX is above 12, no, it's less than 12. If VIX is less than 12, you're going to increase TQQ or QLD by 15%. If we're between 12 and 20, you're going to increase TQQ by 7.5%. As VIX goes up between 20 and 30, we're going to decrease our TQQ or QLD by 7.5%. And if VIX is above 30, is that right? 30, yeah, less than 30, less than or equal to 30. That should be above 30. I think I got that wrong. VIX is less than 12. This should be, let's see, VIX is between greater than that. If VIX is, let me do this. If VIX is greater than, let me put the right sign, greater than or equal to 30, we're going to decrease TQQ or QLD by 15% and increase TMF by 15%. All right, let's get to the exciting part. And this is our EMA and SMA allocation adjustments. And this is where I made some changes, and the back tested results were really, really good. If QQQ is above its 10-month simple moving average, and I just showed y'all that chart a while ago, and the 10-week is above the 20-week, you're going to increase your TQQQ by 20% and decrease your TMF by 20%. This will also work on increased TQQQ, I should say, or QLD by, no, let's see, it's not QLD. Yeah, it is QLD too. It applies to QLD by 20%, decrease TMF by 20%. Make sure that's right. No, it's not, because we would never be in QLD if both of these are up. Sorry, y'all. I'm just talking to myself. If QQQ is above the 10-month SMA and 10-week SMA, you're in TQQ. You're not in QLD. And you're going to increase your TQQ by 20%. Okay? Everybody with that? Now, what about if both of them are below? So if both of those signals are below, it's basically telling us that we are in a bearish type market, right? We may not officially be in a bear market, but it's like the market is more likely to go down. So what we're going to do, if both of those are below those, what we're going to do is we're going to go to 50% SQQQ, and we're going to go to 50% TML for a little diversification. Now, I will tell you this, I did test a variety of combinations, 60-30 or 60-40, 70-30, 80-20, and even 100% SQQQ. And indeed, 100% SQQQ was more profitable. However, the returns were very volatile. So the volatility of the returns were very high with 100% SQQQ. And it was not that much difference in the 50-50 split, and the risk adjusted returns or the Sharpe ratio was increasing. It was much higher with the 50-50 split, and the actual end results were not that much different. So I decided to go with the 50-50. That's where I put it. Now, if the trend indicators give you a mixed signal, you're going to switch to 55% QLD and 45% TML. So basically what this does is it's like, the market's kind of at a standstill here. We don't know. It could be going up and it could be going down, and we've got conflicting signals with our technical indicators here. So what we're going to do is we're going to reduce the leverage. So you're not really reducing the splits. We're going to go 55% QLD, 45% TML. Now, the VIX adjustment still applies here. So if the VIX was under 12, we would add 15% to our QLD and so on and so on. So the VIX adjustment still applies to this, but we go to 55%, 45% TMF. Again, I tested all kinds, 100% QLD, 100% TMF, and anything and everything in between. And 55, 45 turned out to be correct, which is interesting because our base formula anyway is 55, 45 TQQ and TMF. So I know you're sitting there going, oh my God, this is so complicated. And it's really not. I'm going to show you how it's not complicated. Also, we have a 15% stop loss that we implement. We look at it at the beginning of each month. We compare the current portfolio value to its highest value achieved so far, which is the high water mark. If the current value is 15% or more below the high water mark, we move to 100% cash or bill for the entire following month. Then for the next month, we reset the high water mark to the current portfolio value, and we resume normal strategy allocation in the subsequent month using the new high water mark for future stop loss allocations. Okay, seems really thing. So we only do this on the first trading day of the month. So the cool thing is, if you're on vacation, you only have to do this on the first of the month. So we don't even look at it, or you don't have to look at it through the middle of the month. You can just let it go. Now, of course, some of us are running the hedges, and those require a little constant monitoring, but not that much. So we got the hedging going on as well. We know what we do with new money. We divide it up into 6 parts. We invest each one part every 6 months. All right, so 1/6 every 6 months, and use the current month's allocation percentages for each of those investments. And we do have an acceleration clause. If TQQ were to drop 10% from the initial investment price, we immediately invest all remaining installments using the current month's allocation percentage. So in other words, if you get a 10% drop in TQQQ, you have permission, but not the obligation to go 100% into into the investment strategy. Okay, I won't go over the hedging because you know the hedging. We've got the Sweet Bobby hedge, we've got VIX hedge, and we've got long puts. You can do any or all of those or a combination of those, whatever keeps you in business. And we've got the monthly prompts, which we really don't need anymore because we're not having to go to the AI bot and ask for the thing, because we have this swanky, and I do mean swanky, baby. We've got this swanky little calculator here. So we got NetLick here. We've got the calculator here. We've got trades to keep up with our Black Swan hedge trades. We got our Sweet Bobby hedge break-even analysis to know how much to buy and sell our things for, so that we do these for an ultimate credit. We've got keeping up with realized returns. You can see what the market's doing compared to how we're doing. And put ladder, if you want to do puts, buy puts every other week. We've got the VIX hedge and all of it there. And then we've got this cool little dashboard that will tell us how many percentage shares of all of these that we have. It'll keep up with our shares. It keeps up with our current stock price. You don't have to enter anything there, and it will automatically do the calculations on how this is and everything. And it keeps up with your overall profit and loss. So our overall profit and loss on 1/6 of our portfolio is $266. We made $568 on TQQQ, but we've lost $475 on TMF, and we made $266. Okay. So variables, don't mess with it. This is just stuff that I've got in here that, I don't know what this is. Look up to, I don't know. Oh, we don't even need this anymore. Delta theta buying power. Let me just turn those off. There we go. Don't even need them. Just clearing up the spreadsheet. Okay, so let's go to the calculator. Now, I think you're going to like this, right? It automatically, all you have to do is enter the stuff in yellow, right? And I've even got drop down here for you so you can't mess it up. So if we are at the first of the month of 2024, current portfolio value would be, if you started off with $100,000, that is your high water mark. And you answered the question, was the stop loss triggered last month? Yes or no? I think if we say yes here, it puts us into 100% cash, right? Uh-oh, we got to fix that. I'll fix that before I do it. That should trigger that, thus going 100% to cash. I'll fix that, no big deal. All right, so it automatically pulls these prices in, so you don't have to put the price in. Now watch this. If the interest rate were to go up by 0.5% or more, what's this, y'all? So if I change this to 4%, watch what it does. It puts you 100% into Bill. Isn't that cool? Tells you to buy 1,090 shares of Bill. So this way we miss any of those 2022 like areas. But let's set this back to like 4.7 or so it doesn't trigger that. Okay. So then really the only questions that you have to ask is the QQQ above its 10-month SMA? Now remember, if both of these are yes, we're going to go 55% TQQQ, 45% TMF, and then there's a 20% adjustment here. So this goes up to 55 to 75, and then we've got a VIX adjustment of 7.5%. So that puts you at like 82.5% or so, and we cap at 80%. So you go 80%, 20%. Now watch this. If one of these gets in no, that's middle. So then what you do is we go 55, 45, remember, into QLD. So we buy QLD, but also the VIX adjustment here of 7.5% also is included. Everybody see that? The VIX thing is also included, so it adds another 7.5%. So that works correctly. Now, what happens if both of these are no and we are bearish? Check it out. Very, very cool. It tells you that we are bearish, and then it puts us into 50% of TMF and 50%. There's no VIX adjustment on this. So we go 50-50, and it tells you how many shares of SQQQ to buy and how many shares of TMF to buy. This was a booger of a spreadsheet to put together, but it is available to all of our Muscadine Mafia subscribers, and as a way of saying thanks for being one of our premium members. And I think it's a really, really cool spreadsheet. So listen, here's what I've got to tell y'all with this though. This is fun money, y'all. I am putting 76,000 into this strategy. It is fun money. This is not the baby formula money. This strategy comes with a lot of risk. It's something that you need to be careful and cautious about. I just want to make sure that nobody gets caught off guard. Okay. It's very, 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 very risky. So everybody stay with me. Now, I wanted to show you something. Let's see if I can find it. I wanted to show you Claude and what Claude came up with, because I basically asked Claude to do some forward testing on it. So let's see if we can figure out what Claude did for me here. And we basically said, do some forward testing for me and do some, let's see what it did here. We wanted it to do 10 and 20%, 10 or 20 years down in the future, 5% in the future. So let's see. Here was what it did in a bull market. It was win rate 45 to 55% annual returns in a bull market. Win rate was 85%. Average monthly gain was 4.2%. Recovery time. Best allocation was TQQ TMF with max VIX adjustments. And it compared that with buy and hold TQQQ. Now, of course, during a bullish area, TQQQ is going to kill you, right? I mean, if you're 100% in it. We were doing 45 to 55% annual returns. TQQ did 65 to 75%. But then we look at bear markets. And so what our strategy did in bear markets was a 15 to 25% annual return with 70% win rate. Well, average gain monthly was 1.8%. And the best allocation, of course, was SQQQ and TMF and the cash timing. So we did really good. Now look, compared to a bearish market of buy and hold TQQ, look at this, y'all. It's not even close. We made a positive 15 to 25% annually, while TQQ was negative 60% to negative 80% annually, had severe drawdowns, whereas we did not. Sideways markets. This was interesting in case we go to the sideways market. The forward projections Monte Carlo analysis showed that we would make between 20 and 30% annually, and the returns of buy and hold TQQ range from -10 to 10% annually, had high volatility decay. Well, what you notice is we take a little bit of the volatility out by moving from a 3x leverage product to a 2x leverage product in such these environments. So the QLD TMF provided a little bit more stability there, which is really cool. All right, so 10-year simulation, average case had 100, this is a 10-year simulation from 2024 to 2034. You started with $100,000. The average case would have us moving up to $2.3 million, or a 37% return, a maximum drawdown of 30%. The 10th percentile had us only getting up to 1.4 million with a return of 30.8% with max drawdown of 35%. So this was a little bit, less, but still, I think any of us would, jump up and down over a 30% average growth rate, right? Compound average growth rate. The 90th percentile, if we really did really well, our 100,000 would turn into $3.8 million with a 44% average growth rate with a 25% drawdown. The 20-year simulations took us from $100,000 to 12 million. 10th percentile took us up to 7 million. And if it really overperformed, we ended up with $100,000 over 20 years at $18 million, which was a 33%. So optimal market allocation adjustments in bull markets. We want to maximize TQQ exposure near 80%. Now you could run 100%, but we're getting a little bit of diversification by putting TMF in there, reduce TMF to a minimum, and be aggressive on your VIX adjustments. In bear markets, we quickly transition to SQQQ, TMF. We utilize the federal funds rate trigger effectively, and we conservatively with our VIX adjustments. Actually, this should be taken out because we don't actually use VIX adjustments on SQQQ. That's a misprint. Sideways markets will rely on QLD and TMF based, moderate VIX adjustments, and more frequent rebalancing. So the key findings of the Monte Carlo forward testing was the strategy performs well in all market types. It is most robust during transitions between market types, which is really cool. VIX adjustments are particularly valuable in sideways markets. I would agree with that. The federal funds rate trigger is crucial during sustained downtrends, and the mixed signals provide an excellent middle ground. All right, questions? Did I give y'all too much? All right. If there's nothing, then thank you all for being here, and I will post the trading plan, updated trading plan, and the spreadsheet later today. And I love you to pieces, and I will see y'all tomorrow.